Thank you for joining me. I'm Alex, and I want to talk about AT&T today because I figured I'd do some stocks this week that really shouldn't have gotten hit hard by the current situation, and yet they were. Or maybe I'll do some that weren't, but either way, I'll look at some stocks that really shouldn't be affected by the current situation and therefore really shouldn't be going down. So, as you can see, sales still going on yesterday, down 3%-ish. So what AT&T does is telephones, broadband, and they have some other things like Time Warner and stuff. So obviously slightly diversified there, but the core business and the huge part of their assets is telephones and broadband. Price currently $26.77, which gives them a market cap of $192 billion. And their price was just under $40 in this past year. And so they took quite a bit of a hit, like 30-ish%. Dividend yield over 7% with a payout ratio of 108%. Obviously, the payout ratio is kind of a problem, but the dividend yield definitely looks nice. Revenue $181 billion, way up. Earnings $13.9 billion, way down. And that gives them a PE of 14 with a forward PE of 7, which is pretty amazing. Obviously, PE of 7 would more than pay for the dividend that they're currently paying without having to go over 100%. I would guesstimate that the payout ratio would then be 65-ish%. 65% is well within the good range that you should be looking for. So obviously no one knows if they're going to reach the PE of 7, but I strongly assume that they're going to get a PE to where they can comfortably pay the dividend yield of currently 7.77%. Total assets $551 billion, total liabilities $349 billion, which gives them a stockholders' equity of $184 billion, which is almost the same as past year. So despite the payout ratio, they haven't really lost anything. So definitely good news there. To sum that all up, obviously, this is not a growth stock, and even the 11 billion that the revenue was higher is only 5-ish%, 6%. So for a growth investor, this is definitely not the stock for you. For a value investor, currently the payout ratio is way too high, but as I said, it will get back into the acceptable range. So balance sheet not looking great, but definitely not looking terrible. PE is fine. So for a value investor, this looks very interesting. For a dividend investor, this looks even more interesting because the enormous dividend yield, they have been increasing their dividend. So dividend growth is there as well. Balance sheet looks okay. Revenue is growing, which is a huge thing. So overall, I would say that for a dividend investor, this really looks like very interesting stock. So obviously do your own research, but look into that, look into the risk factors. But currently, I would expect them to do business as usual for the foreseeable future. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.